Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX.com. And usually the first thing I do when I get there is scroll down to click on Jamie's technical report. So let's see what he has to say today. The synopsis on top: the U.S. dollar is strong, but signs point to a short-term top forming soon for the U.S. dollar. Now let's scroll down to the dollar yen. As Jamie has been spot on in his call for a decline in the dollar yen against that the shorter-term daily trend line that he's been using. Let's read his synopsis. Dollar yen finally broke lower. 100 is the next level that will be put to the test. Former support just shy of 103. 102.81 to be exact, is potential resistance, as is the breakout level from 103.50. So let's go ahead and pull up the chart that we've been using lately, and again, that resistance line, personally I was not able to get an entry anywhere close to that resistance line, although the prices did approach it, but not close enough for a good risk-to-reward trade. But hopefully you at home were listening to his reports. Again, he's been bearish, I believe, since Tuesday of last week, and he's forecasted this decline as long as prices have stayed beneath that resistance line, which they certainly have. And we can see the clear breakout beneath that 103.50 area that Jamie was speaking about. But on the other side, we also see a very long candle wick left behind today. I believe this is about 160 pip wick, and usually long wicks represent turning points in the market, and the low on this candle was about 100.21. This could be a reflection of people wanting to protect that 100 area in the dollar yen. So it is something to look for moving forward. It could be a potential area of support, but the dollar yen pair is always a very tricky pair to trade. It wouldn't surprise me if it came down, took out that 100.21 low, just to shake out those people who think that a low, in fact, has formed here. So right now, with prices in between this range, between the 103.50 area and again the low form today, there's nothing to do right now at current prices. But again, as Jamie was mentioning, 100 potential area of support, as well as 103.50 potential area of resistance. So this is what I would look for moving forward. These are the levels that Jamie is using right now, and I wouldn't be surprised to see particularly if volatility slows down a little bit in the equity markets, to see a nice range forming here in between that 103.50 area and the 100 support area. So that's something to look for moving forward. But again, Jamie has called this decline almost perfectly in terms of being bearish against that resistance line. So certainly keep an eye on his reports to see if any trades set up. And certainly the levels that he has given, the 103.50 area and 102.81, could again be potential areas of resistance. And that's what I would look for right here. At least initially, even a shorter term trade definitely would be bearish against this former support line, which should act as resistance in the future. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.